Let's dive right into this explainer. While the broader market is seemingly running for the exits right now, MicroStrategy's CEO Fong Lei is charting a radically different course. We're going to unpack a recent interview that reveals exactly how this multi-billion-dollar enterprise is flipping widespread market panic into a calculated long-term Bitcoin master plan. We're talking about navigating massive debt, doubling down on digital assets, and most importantly, how they view current market headwinds turning into massive future tailwinds while the rest of the institutional pack just retreats to safety.
Okay, here's our roadmap for today. First, we'll look at billionaires bail, MicroStrategy buys, then the billion-dollar debt play. After that, the core of our explainer, headwinds turning into tailwinds, followed by the digital equity REIT, and finally, a thriving software foundation.
So part 1, billionaires bail, MicroStrategy buys. Let's look at the immediate conflict we're seeing on the board right now. We are definitely seeing a clear trader mindset taking hold. Smart money seems to be leaving the space. You've got billionaires like Mark Cuban selling off his holdings to chase AI, stating point blank that Bitcoin has, quote, lost the plot. And hey, he's definitely not alone. Recent SEC filings show that billionaire investor Paul Tudor Jones liquidated his entire stake in MicroStrategy during the first quarter. There's this palpable tension, right? The billionaire class is locking in those massive gains from the 2021 surge and moving their capital to the next shiny object, which undeniably is artificial intelligence. But this perfectly illustrates the strategic contrast of play here, the trader mindset versus the aggregator mindset. Because while those traders bounce in and out, MicroStrategy is acting as an unyielding aggregator. Get this, they recently bought $1.6 billion of Bitcoin in just one single week. To put that into perspective for you, they essentially bought more Bitcoin in a week than a massive corporation like SpaceX holds on its entire balance sheet. Same, they're built to hold right through the noise. Right, moving on to part 2, the billion-dollar debt play. Because you have to wonder, how exactly is the company funding this massive accumulation? Well, the company is carrying roughly $8 billion of convertible debt on their balance sheet. Just let that scale sink in for a second. $8 billion. That is a staggering number, sitting senior to their preferred stock, and it has absolutely drawn the attention and, honestly, the ire of market analysts across the board. So to manage this incredible leverage, MicroStrategy recently repurchased $1.5 billion in convertible bonds that were due in 2029. But vocal critics, like Peter Schiff, argue that paying down $1.5 billion of this debt burns badly needed cash and sacrifices free financing. Schiff and other market bears see this as a severe waste of resources, especially given the stock's roller coaster volatility lately, dropping from October highs down to 120 earlier this year before rebounding back up to around 180 at the time of this maneuver. But here is the crucial discount math. Because Bitcoin's price dipped, the debt tied to it got cheaper. It's actually brilliant. They essentially bought $1 worth of convertible debt for just 92 cents and secured loans for an incredible 80 cents. They used a $2.25 billion cash reserve that was built for this exact scenario, deploying capital to literally buy their own debt at a massive discount. So they're acting dynamically when the math works entirely in their favor, creating more room for preferred stock and actually increasing the overall Bitcoin per share. Which brings us to part 3. Headwinds turning into tailwinds. This is really the core of Lee's entire worldview and what we're focusing on today. Let points to 4 distinct macroeconomic factors currently disrupting global markets. We've got active conflict in the Middle East, widespread uncertainty regarding sticky inflation, fluctuating interest rates driven by central bank actions, and impending crypto legislation moving through the government. Now, for 99% of traditional corporations, this exact combination of geopolitical strife and monetary tightening is a glaring, flashing red stop sign. It's a signal to sell, halt expansion, and retreat to extreme defensive posturing. But here is the massive contrarian pivot. Lou doesn't see these as negative market headwinds to panic over. He sees them as impending positive tailwinds over the next 6 months. Why? Well, because as inflation bites and geopolitical uncertainty rises, Lou believes institutional capital will literally be forced to seek out non-sovereign digital safe havens. They view fiat debasement not as a threat to their business, but as the very mechanism that drives value into fixed supply assets. So what the traditional market is pricing in as a macroeconomic crisis, Lou is actually pricing in as a major adoption catalyst. He said it perfectly. I see headwinds turning into tailwinds. This is an opportunity to buy more Bitcoin. Unlike previous market cycles where a massive drawdown sparked serious nerves,
This calculated macroeconomic outlook completely fuels their conviction to just keep buying. When the broader market retreats to cash, MicroStrategy sees cash as a liability and Bitcoin as the ultimate life raft. They are turning those terrifying headwinds directly into a buying opportunity, interpreting the current global landscape as a prime chance to accumulate even more.
Let's look at part 4, the digital equity REIT. To really make sense of this aggressive buying, we have to look at how they classify the asset itself. They view Bitcoin not just as a currency, but as digital capital. They argue that it is a fundamentally superior form of storing value than traditional stocks, bonds, or real estate. And listen, to pull off a multi-billion-dollar strategy like this, you have to genuinely believe in that premise at a foundational level, even when critics are constantly pointing out paper losses driven by short-term quarterly drops.
Just like a traditional REIT holds physical real estate and passes the rental yield and property appreciation to its investors, MicroStrategy essentially acts as a digital equity REIT. They hold digital property on their balance sheet and systematically pass that value upward, striving to constantly increase the amount of Bitcoin value backing every single share of their stock. While they might occasionally harvest unrealized tax losses, the primary goal is crystal clear: act as a net purchaser and constantly pass those digital equity gains right through to the shareholders.
And finally, part 5, a thriving software foundation. Because executing this high-wire financial act requires a massive, incredibly stable safety net. It's so easy to forget that the biggest corporate whale in crypto is actually a 26-year-old traditional software business. We're talking 1,500 employees, 3,000 global customers operating in 25 countries, and valued at $2 billion. That seemingly boring legacy software business is the actual engine paying for the highly skilled accounting team, the tax experts, and the serious legal muscle required to safely manage a $62 billion Bitcoin treasury. It is the steady, reliable foundation powering a highly volatile vehicle.
So as we wrap up this explainer, the ultimate question really emerges. Will MicroStrategy's unyielding aggregator philosophy outlast the volatile trader mentality in the long run? We've seen how they buy debt at a discount, absorbed global market panic, and use a legacy software business to quietly fund a massive digital empire. But the next 6 months, that will truly test Lay's macroeconomic thesis of headwinds turning into tailwinds. When the dust settles on this global uncertainty, will the billionaires who fled to AI be proven right, or will MicroStrategy's digital equity model completely redefine corporate finance forever?